Types of homeowner insurance policies. According to a 2018 National Association of Insurance Commissioner NAIC report on data from 2016, 73.8% of homes were covered by owners occupied homeowners policies. Of others, this 79.52% had on HO3 special policy and 30.35% had the more expensive HO5 comprehensive. Both of these policies are all risks or open perils, meaning that they cover all perils except those specifically excluded homes covered by an HO2 board policy accounted for 5.50%, which covers only specific named perils. The remaining 2% includes the HO1 basic and the HO8 modified policies, which are the most limited in the coverage offered. HO8, also known as older home insurance, is likely to pay only actual cash value for the damage rather than a replacement. The remaining 21.3% of home insurance policy were covered by rented or condominium insurance. 14.8% of these had the HO4 content board form, also known as returns insurance, which covered the contents of an apartment not specifically covered in the blanket policy written for the complex. This policy can also cover liability arising from injury to guests as well as negligence of the renter within the coverage territory. Common coverage areas are events such as lighting, riot, erratic expression, vandalism, smoke that windstorm or hail, falling object, vacancies, erosion, snow, sleet, and weight of ice. The remainder had the HO6 unit owners policy, also known as a condominium insurance, which is designed for a owner of condos and includes cover for the part of the building owned by the insured and for the property housed therein, designed to stem the gap between the coverage provided by the blanket policy written for the entire neighborhood or building and the personal property inside the home. The condominium associations by law may determine the total amount of insurance necessary. Easy in Florida, the scope of coverage in the prescribed by statute. Causes of loss. According to the 2008 Insurance Information Institute, fact booked for every 100 of premium in 2005. On average, 16 went to fire and lighting, 30 to wind and hails, 11 to water damage and freezing, 4 for other causes and 2 for theft, and additional 3 went to liability and medical payments, and 9 for claims stamped expenses, and the remaining 25 was allocated in insurance expense. One studies of fires found that most were caused by heating incidents, although smoking was a risk factor for fatal fires. Claims process. After a loss, the insurance is expected to take steps to mitigate the loss. Insurance policy typically requires that the insurer be notified within a reasonable time period. After that, a claim adjuster will investigate the claim, and the insured may be required to provide various information. Filing a claim may result in a insurance in rate or in non-renewal or cancellation. In additional, insurance may share the claim data in the industry database. The two major ones are CLUE and A+. With claim loss underwriting exchange CLUE by SourcePoint receiving data from 98% of US insurance.